Hello, everyone. Nice to be with you again, and hopefully to continue to provide some market commentary, insight, and analysis, and maybe some interesting interviews as well. Just getting set up here, so we'll have some stock charts and a better mic soon. But meanwhile, I do want to first say thank you so much for all of the people who follow me and have reached out with such kind words, encouraging words, and appreciation for the past 10 years. It means a ton. I've read all of them and hopefully responded to all of them as well. So thank you so much. But let's get to it. Let's keep this going. Let's take a look at the markets, which had a huge rally this week once again. Some record high closes for the S&P 500, the NASDAQ, the TSX, as well as the Russell 2000. What happened this week? Well, it was really back to basics, back to fundamentals. That's what really drove the markets. And front and center, of course, on that was what happened in the earnings picture. We saw some really nice strength pretty much across the board from tech companies. Google is a standout there and is actually one of the most under-owned stocks by the big hedge funds and money managers, so keep that as a note. And also the industrials were very strong. That's important in terms of the reopening trade, the reflation trade that we've talked so much about. It was interesting, both value as well as growth worked this week, so there is the possibility that we can continue to see that. But not only was it the earnings that drove the markets higher, we also, of course, have the Fed that continues to be a tailwind. They're pretty much going out of their way to tell us not to worry about any type of taper tantrum that we saw years ago. In other words, they won't act too fast to raise rates. They're going to make sure that the economy is on very stable footing. They'll let the inflation run a little bit hot. They're calling it transitory. So last week, of course, and the week before, investors were a little bit concerned about the Fed and if they would move too fast. That was put to the sidelines this week. Also, when we think about drivers of the market, we've got fiscal stimulus expectations that continue to be very positive and optimistic in terms of the size of the package that could be passed. So that's also a key driver. And then vaccine progress. It's interesting here when we think about the first vaccinations that have taken place. About 15% of the UK population has had their first vaccine. It's 8% in the United States. It's 2.5% in the EU as well as Canada. It's important to think about that as we think about who is going to recover and get back to normal faster. That can help determine in terms of where you want to place your bets. But of course, valuations always come into play as well. Also, when we think about the market moving higher, importantly, I always take a look at the VIX as the fear index. That has declined dramatically. So it's kind of confirming that we are seeing a belief in the market. Volumes, though, however, were a little bit tame today. The market was tame today. When we think about the TSX, what worked there, we've got materials, oil, as well as tech, all showing some nice strength. WTI is up by about 9% on the week alone. So that's been very positive for the energy sector and those energy stocks. Also, just a couple other key stocks to watch here in Canada. The Score was up by about 18%. AcuityAds was also up strongly, and also Real Matters. So just a few to mention there. In the United States, a lot of focus on Snap, which is up by about 10%. Pinterest continues to show some very good results in their earnings, setting that stock up by about 5%. And Estee Lauder, it's always important to take a look at companies like an Estee Lauder in terms of the demand that they're seeing from the consumer. Very strong results there. That stock ended the day by about 7% to the upside. So we are seeing some nice strength, pretty much broad-based strength as well. But the one item I would point out in terms of where we might see some risk, and this is where a lot of investors have been focusing their attention, is what's going to happen with respect to inflation. Now, you know that the Fed is saying that this is going to be somewhat transitory, but how is it in fact funneling through the economy? Are we going to see increasing prices? You're seeing that U.S. 10-year yield jump dramatically. That's something you got to pay a lot of attention to, because the inflation picture, or at least the inflation outlook from a near-term perspective, does impact the bond market. The bond market, of course, impacts the equity market in terms of the movements. And I was speaking with a veteran fixed income investor earlier today, and that's exactly what he's watching. This backup in yields that we're seeing, what will that really mean in terms of the equity market? And he is seeing a few red flags. So hopefully we'll have him for you. At the same time, that's his views. Another piece of research I was reading earlier today is talking about the fact that, look, you can have rates rise at a measured pace, and that's actually positive for the equity market. It's actually a signal that it's a new bull market. So very different views. We'll hopefully be discussing them with a few interesting guests next week. But have a great, safe, fun weekend. And who is your bet for the Super Bowl? I think mine has to be Kansas City, because I love my clients down in Kansas like Waddell and Reed. So I guess I'm a Kansas supporter for this round. But let me know who you like and who you think are going to win, and definitely give me any feedback in terms of areas you want me to cover. We'll speak soon. Have a great weekend. I hope we speak soon. We'll have a great weekend.